Hello and welcome to this week's Gold and Silver Club Weekly Commodities Review in alliance with ACM Gold, presented by myself, Phil Carr, and Nik Kalsi at thegoldandsilverclub.com. Today we'll be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end-of-week summary for the metals, the energies and agriculture. We'll look at gold, silver, oil, natural gas, coffee, wheat. We'll look at the top trade of the week. We'll cover live market commentary and technical analysis. We'll look at the week ahead, so key events you want to look at moving forward. There's 6 key events we need to look at today and over next week as well. And of course, we'll answer any questions you may have on today's call too. So gold price in ZAR this week. We are actually seeing gold right now. It's broke momentarily above the 1300. We're currently trading at $1,296 an ounce. We have seen a slightly stronger ZAR this week. In fact, in the US non-farm payrolls, we did see some strength on the ZAR. And we'll take a look at the gold market in the technicals very shortly. US non-farm payrolls did come out and fell below expectations, which have pushed gold above $1,300 an ounce. The most important US economic report of the month is the US jobs report, the non-farm payrolls. The Department of Labor released the latest employment data at 8:30 a.m. Eastern Time, 2:30 p.m. Central Africa time. The US economy added fewer non-farm payroll jobs than expected in March, but showed continued improvement, while the national unemployment rate held steady, missing expectations. The world's largest economy gained 192,000 non-farm payroll in March compared to expectations of 200,000 and the previous month's 175,000. The national unemployment rate, meanwhile, stayed at 6.7%. The data supported sentiment that the US economy is on its way to a full recovery, boosted by the Institute for Supply Management. The ISM Non-Manufacturing Purchasing Managers Index PMI released earlier this week, which pointed to a strong turnaround from the heavy winter that stunted economic growth. From a technical perspective, the figure fell below the estimate of 200,000, triggering a sharp sell-off on the US dollar index, and gold prices broke above 1,300 an ounce. So the big question now is certainly, will gold prices continue to trade higher into next week? We'll take a look at the technicals very shortly with you. Before we do that, quick introduction for the Gold and Silver Club. I'm Phil Carr, professional trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas, commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nik Kalsi, professional trader, investment analyst and speaker. Nik began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's successful traders, discovered the formula, the mindset and tools that give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial TV. So that's some background on the Gold and Silver Club, and we'll take a look at the gold price right now. We're currently trading at $1,297 an ounce. We'll take a look at the charts and the technicals very shortly. Before we do so, the top trade of the week, and we continue to break out actually at the moment on the Gold and Silver Club using our key signature trading strategies, has in fact been Brent crude oil. We continue to break out at the moment. The market actually just came to a 4-to-1 this morning, but we had a nice, really nice breakout yesterday, entering at 104.92. Risk on that was 45 points, $450 risk for each lot for 135 points profit, $1,350 profit for each lot traded for a really nice 3-to-1 on Brent crude oil. So that's the top trade of the week, and with that we'll take a look at the technicals at the moment. So I can see a lot of very interesting setups lining up. The key setup, probably one of the best setups at the moment you can do, we're looking at right now, we've actually taken this setup, is a sell short on wheat right now. Wheat has just broken a major technical level, 64.75. We've been in wheat short actually since we broke this weekly. We had a weekly sell short trigger earlier on in the week as well, just at 686.65. This has actually given us another entry point. We're now loaded up on a second position here on week as we continue to break through another key level, 66475. We are looking for a move down to the Fibonacci below, which is 641. 0.54, which also takes us to right at the 200-day moving average and a major trend line as well. So looking weak here, we are looking for a nice move lower. Other trades that we've just taken as well to get back into the trade, we've actually got a really nice setup at the moment on Brent. Brent's actually breaking up right now. We've got a nice little, we'll just put it into the 1 hour for you. We've got a nice little trend channel we've been forming. We broke above 106.74 during non-farm payroll. It's been a bit of a slow start on Brent and WTI from this non-farm payroll, but we've already been in a trade from yesterday. You'll see our top trade of the week. Now we're looking to break above 106.92 Fibonacci level, come up to 107.17 and come up and revisit 107.81. The Brent trade is in play for a long right now. We are in this position. We're looking just for a break above, a little bit higher here. You can see that we're starting to break higher. We'll take a look at WTI as well. WTI, I don't really see any major resistance here until 101.50 up above, and ideally looking to take WTI up to this whole cluster of Fibonacci's at the 102 level, so the 101.96 up to 102.21. Got a whole area of resistance there that we're looking for WTI to break out to. So Brent and WTI, particularly Brent, we like that for a breakout at the moment. Australian US dollar, well, we just caught, actually it's just come up and hit our 1-to-1 now. We had a really nice setup just on non-farm payroll. You can see the move that we've had, and it's just come up, hit that major level of resistance. Now, will we break above 2014 highs is the question. So when, if you've not had a chance to watch this with us live, you'll be interested to check out, have a look and see if we got to our 2-to-1 at 0.93449. We're still long Australian US dollar. The breakout from non-farm payroll has been lucrative here, and we want to see whether we're going to get a further breakout and hit our 2-to-1. So we're long Australian US dollar. Copper has been working out of this V-shaped reversal pattern. I'm just on the futures contract right now. Essentially, we had another supported bounce yesterday, nice hammer form right at a key moving average. We continue just to grind higher here on copper. We'll take a look at silver. Silver, actually, I would actually keep an eye on silver. It looks like we want to form a nice bottom here. We're breaking out of this neckline. Let me zoom out a little bit, show you what we mean. We've got a major trend line here. 30th of December was tested, beginning of February, now it's the end of March. You can see we're testing that key level, and silver looks like it wants to bottom out here and break out to the upside. In fact, I like the move we're getting on gold right now. Gold's looking interesting. Gold's making another run for the 1300 level. I like that setup. Let's just put it into, that's on the 4 hour. Let's just look at the, let me put it back into the 1 hour. We're seeing a nice move here. If gold can get back above the 1300s, correlate with silver as well and copper, we can see a nice move high here. If gold can get above the 1300 break key, stay above that level, it's now managed to get back above the 200-day moving average. We've been having our live trading rooms with all our traders this morning. This is a position we also got triggered into on a break of the 1296 level there. If we can get a confirmed break and close above 1300, you'll see we've got a nice V-shaped reversal pattern here as well. Very clear. Got a nice neckline which has just formed here as well, and we're just broken above that neckline. 1296. We're at 1299. So gold looking strong here. If we can just close above 1300, keep above the 200-day moving average, possibly get a move up to 1306, 1311. If it can get up to the 50-day moving average, perfect. It bodes pretty well as we move into next week. We'll just look at the weekly. Weekly, you've got a beautiful hammer there which is formed on the weekly for gold, which we'll certainly be taking a look at for a nice swing trade if that confirms next week. So I'm liking gold here for a close, strong close. If it can get above 1300, really important. If we move over, so basically the play is at the moment wheat short, gold long. We just take off, let's just add on, in fact we don't need, there's not too much going on with coffee at the moment. We'll just take a look at natural gas. Natural gas really struggling with that to really clear that resistance channel. We'll just have a look on the daily. We're on a futures contract, so there is a few more levels of resistance just above which you can't see right now, but we are struggling with this area of resistance around the 4.48 level. Possibly it might be a good sell short if you can get back within this overall downward trending channel. We could be in for a nice sell short and take it back to the 4.291 level here on natural gas. We'll see how that plays out. It's not as clear a setup as we're seeing on some of the other markets at the moment. Australian US dollar looks like it's going to break above the 2014 highs. That should trigger some longs here. That's definitely in play at the moment. And silver as well, I'll be keeping an eye on that. So let's just do this. We'll tile the windows. We just really want to get a good idea of what our top trades are right now. So let's just move it on to, okay, we'll move Brent down. Copper is swing trade. So silver definitely in play. Want to see, it's looking like a good breakout here. Australian US dollar definitely in play. It's a trade that we're already in at the moment. Natural gas, actually we'll put it on wheat as well. Wheat is definitely in play for a sell short here. And gold is in play for a breakout long. That's our really top trades at the moment. That's how we're playing it. That's how we're playing the non-farm payroll. So we're in Australian US dollar already. Just triggered wheat short. You can see my entry there, just below 6.6475. Entry above there, 12.96 on gold. And silver looks like it's going to break out. If it can just close above the 20.18 level, it's going to have a nice move. So that's how we're playing the post non-farm payroll today. Looks to be moving really nicely. So we hope you caught some of these moves as well. I'm sure there'll be plenty more. You can see, look at that, wheat just coming down now. That's really not got much support until it comes down to the next key fib levels below there. So with that, let's take a look at the major news announcements we've got as we go ahead to next week. Well, of course, we've had the non-farm payrolls already. Wednesday, the 9th of April, we've got the US crude oil inventories. That is at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time. That data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms report those levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. Very tradable every week on Wednesday at 10:30 a.m. Eastern, 4:30 p.m. CAT. We've then got Thursday, 10th of April, 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time. That is the US Import Price Index. That import price measures the change in the price of imported goods and services purchased domestically. So a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. And then next Thursday, the 10th of April, 2:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US natural gas storage. Now, the Energy Information Administration, the EIA, provide that report every week on a Wednesday, reporting the measure in the change of the number of cubic feet of natural gas held in underground storage during the past week. Very day tradable with natural gas. If you've got a surplus of inventories, we normally see a sell-off, and if we've got a lack of inventories, there's a deficit and a shortfall, we see a breakout to the upside natural gas, very tradable. Friday, the 11th of April, 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we've got the US PPI. So the Producer Price Index, PPI, measures the change in the price of goods sold by manufacturers. It's a leading indicator of consumer price inflation. It accounts for the majority of overall inflation. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Then next Friday, 11th of April, US Michigan Consumer Sentiment. So the University of Michigan Consumer Sentiment Index rates the relative level of current and future economic conditions. 3:55 p.m. Central Africa time, 9:55 Eastern time. So there are two versions of that data. They're released 2 weeks apart. You've got the preliminary and the revised. And the preliminary data tends to have the greater impact, and a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish, and that will inversely affect gold and silver. Those are the 6 key news announcements you really need to pay attention to with the commodity markets over the next week. And of course, for everyone who'd like to find out more about how to trade with the Gold and Silver Club live, also join our regular live trading rooms during the week and find out about our Gold and Silver Club Masterclass workshops. You can find out more very simply by calling our Johannesburg office, +27 11 083 8403, or email us at office@thegoldandsilverclub.com. Just fill out the form at www.jointhegoldandsilverclub.com, and we'll come back to you and provide you with details of all upcoming workshops and live trading rooms, okay? So do take advantage of that, and also make sure you subscribe to our newsletter. The free weekly newsletter covers gold, silver, oil, natural gas, the commodities, provides market analysis and prices. So just go to our website, the Gold and Silver Club, for all of that information. Okay, so that is a wrap for today's session. We hope you caught some of the moves today post non-farm payroll. Sure, you can appreciate it's been another very lucrative one. Very keen to see how the markets are going to close today. We'll definitely catch you same time next week for the next one. So have a great weekend, and we'll see you on the next one. Take care and bye-bye.